Hello, everyone. Hello, good morning to you. I pray all is well with everybody. My name is Kobe Cornell Boone. I am managing director and founder of Boone Capital. I'll move this down just a bit. Managing director of Boone Capital. Man, we are a PE firm 506C, and we are all things land, timber, anything that you can see, touch, and feel that's related to the outdoors. Um, it is what we do. It's what we do. That's my passion. That's my love. And praise God, I have been fortunate to be blessed as a result of being an investor in land. So, what I want to do today is I want to talk about some of the tax advantages that I've been able to benefit from investing in land. And now, as we look at as a family, even larger tracts here in the US specifically to build our dream home outside of Dallas, Texas on a sizable piece of property. There's some opportunities that are taking place with recent legislation changes and actually taking advantage of sections of the tax code that benefit you, not loopholes, not gray area type of things, but legitimate structured tax structure that benefits you as a landowner investing in land. So I want to start and kind of preface with a little bit of verbiage to read to you guys today as a disclaimer, and then we're going to jump into kind of what my conversations have been like with my own personal CPA out of Frisco, Texas. So first things first, no cowboy hat today. We're not talking about pretty land, properties, whatever the case may be. I really want to start with a couple of things that you can take to your CPA and have a real conversation about. Hey, accountant, I want to buy a piece of land. How can I buy a piece of land that best benefits me and my family and a strategy that will help us on the back end? So, one, the Big Beautiful Bill, right? Big Beautiful Bill Act signed July 4, 2025. The IRS says Section 168K now provides permanent 100% bonus depreciation for certain qualified property acquired and placed in service after January 19th of 2025. Now, yes, I will start off by saying there have been some updates as well. I think one of the last updates was April 15th, 2026. So let me actually go to the actual IRS website and see if I can pull that for you guys. Sign along, January 4th. Let's see, businesses. Pull that up real quick. Qualified production, 7307. Third party network transactions. Yep, that was in there as well. They had mentioned that. Rural opportunity zones. That's a big one too for my multifamily guys. Man, those section 70421. This is where I want to be right here. All right, here we go. Stay with me, guys. So we're gonna go down to tax benefit for agriculture and rural lending, section 70435 as well. I'm literally reading this directly off the website, you guys. So overview of tax benefit, a new provision, Internal Revenue Code section 139L as well allows eligible lenders to exclude 25% of interest income from federal taxable income. The benefit applies only to interest earned on qualifying loans. Lenders must still include the remaining 75% of interest income in taxable income. Scroll down a little bit. What counts as a qualified loan? Be secured by a farm or rural real property, involve property primarily used for agricultural or rural purposes. Be made on or before July 4th, 2025. Be secured by the property itself, not based only on how loan funds are used. So there's a few others in here that I don't want to go super deep today and lose folks to read. But I am reading directly off of the IRS website. So feel free to go and check this out, you guys, yourself, and present it to your CPA for further due diligence. But we're going to keep reading because I got a few things I want to hit on. So what does that mean from the Big Beautiful Bill, the original sign on July 4th? So that means certain business assets that could be equipment, fencing, improvements, vehicles, qualifying property may be eligible for accelerated depreciation if structured in place and serviced correctly. Emphasis on in service and correctly. Then you have Section 179 for tax years beginning in 2026. The IRS lists the maximum Section 179 deduction at 2.56 million, with a phase out beginning after 4.09 million of qualifying property placed in service. That placed in service is super important, and I'm actually exactly where I want to be. Um, Now, so Section 179 for use in preparing 2025 returns. What's new for 2025? So I'm going to read this one off entirely so you guys can kind of see it. So Section 179 deduction dollar amounts for tax years beginning in 2025. The maximum Section 179 expense deduction is 2.5 million. This limit is reduced by the amount by which the cost of Section 179 property placed in service during the tax year exceeds $4 million. They actually have a chart that you can go and check out for dollar limits there. It states on the website that also the maximum Section 179 expense deduction for sport utility vehicles. So think about your side by sides, right? Your side by sides, your Can-Ams for sport utility vehicles placed in service in tax years beginning in 2025 is $31,300. Man, super important. So again, going back to all of the things that make a ranch run, right? So now when you add that to ranching, you're talking about livestock, you're talking about exotic animals in the great country of Texas. Um, you're talking about your feeders for those animals, handling systems, your barns, fencing, roads, water, infrastructure, UTVs, as I mentioned, your side by sides, your Can-Ams, tractors, operating expenses. All of these things that I just mentioned are included in that actual Section 179. So what am I talking about here? And Kobe, why are you going this deep? And are you even on track? Whatever. Like, this is what CPAs are looking at because this is actually written into the code, the tax code that benefits your landowner, that benefits your ranch owner, that benefits your sporting outdoorsman property, if you will. Some of those I've been blessed to be a part of. Is that it's not just a hobby, if you will, or just something that somebody has, as we say in the hunting world, a back 40. It's not just a back 40 per se, but it's actually an operating business. So another layer that kind of adds on to this too, when I look at properties for our potential LPs and folks in East Texas, is sections 631B. So with that, under section 631B, timber is sold under, you can sell timber as a pay as you cut contract, if you will. So standing timber sold on a pay as you cut contract can receive a special tax treatment when the landowner retains an economic interest in timber. So when I'm looking at land, right, and I'm having this conversation with my own CPA who's getting older. I think he's okay for me to say that we've done pretty well together over the last probably 5 years I've been with this accountant. Yeah, 5 years. I actually started out supporting his firm in a previous job I was in, a previous career role, and then he became my accountant. We've been rocking for years, but to bring this all together, as we were having a conversation and he shared with me, man, I love what you're doing, with the PE firm. I've been thinking about some land myself, and you know what? They're not making any more of it. That's the thing that is always said, and it's always been true. Like, you can't make more land. As it continues to be a demand for land near these growth corridors around the cities, as folks are moving out. I'm 30 years old, turning 31 here in about 2 weeks. Folks are, looking at raising their family. Like, do I want to raise my family inside the city? Do I want to go outside? Do I want to go to the outskirts? Maybe I want an acre or half acre or wherever I can get my hands on that's affordable to be able to, support my family. And hey, oh, by the way, if I could look at possibly acquiring a former farm, former homestead that has some of this existing infrastructure like barns, paddocks, for my equestrians out there, or have this existing infrastructure? Is there a way that it might best benefit me and my family to say go buy? And I'm just going off of the national average median home price right now as of April. I think last time I looked at it was like 435, 425 in that range. Would it best benefit me to take my wealth and invest in a $400,000 50-acre farm, maybe 50-acre active income producing farm, or whatever the case may be, or row crop farm, whatever, as opposed to going and buying a single family new construction home? Hey, I did it, right? And pay the same price on point 0.10 of an acre lot and have to worry about, walking through in the middle of the night or turning on my lights and waking up the neighbors because your houses are so close, right? So I think this is a conversation that a lot of folks are having. And from, hey, a retirement standpoint, your folks that are downsizing, that's another conversation I'm having a lot too with folks that, hey, they might be downsizing their home, but they're not downsizing their lifestyle. And in many cases, those folks I'm having conversations with, they are going with a smaller home but bigger acreage. They're wanting, to recreate horses, um, equestrian life. Maybe it's outdoors, maybe it's getting into vineyards and things of that nature, but they don't need as much house, but they're interested in the land. I think these are conversations that are coming about, and why it's becoming more and more of um, a lucrative um, space, or I would say more of a lucrative conversation, if you will, is because accountants are saying, hey, my folks are, kind of used to seeing the same old, same old. You get up there, you have your $25,000 minimum, whatever the case may be, same it could be multifamily, it could be a single family project, or whatever the case may be. But I think a lot of folks that I'm talking to are like, hey, what's this land deal? How can I get in it? How can I get involved with it? There's so many things you can do. Hey, oh, by the way, during the hold period with us, actually, you're able to enjoy the property. So whether that's hiking, hunting, fishing, whether that's bird watching, you get to enjoy the property as we do improvements during the whole period. Um, just like the property is yours, if you, in a sense, if you will, we actually have a lease program that is written into our LPA agreement. So for any accredited investors out there who watch this video, who are interested, you can definitely check us out at boonecapital.co. That's boonecapital.co. We can have a conversation. But yeah, I think it's one of those things that folks are saying, hey, if I have a real tangible asset, something I can see, touch, feel, that is real, and I have tax code that is written into law to support my ranching, operating business endeavor, to be able to, be able to navigate the financial stressors of being in this industry, because if you're dealing with livestock, you're dealing with real live animals that you're trying to keep alive. If you're dealing with crop, you're trying to keep your crop alive. So there is some volatility that's there, and obviously you have insurance and things of that nature. But to stay on point, um, it's worth looking at. And I've now had not just my immediate CPA, but quite a few accountants, even some wealth management guys recently, I would say in the last couple of weeks as well. It's like, man, this is definitely an alternative investment that I'm interested in. This is something that it kind of makes sense. It's not like um, I would say a meme coin or something that everybody's expecting to go to the moon or whatever. It's kind of like, again, going back to something that's tangible, real, folks can see, touch, feel, and it just makes sense. It's not that hard of something to convince folks on, as much as it is trying to find the right folks that are interested. So if you're one of those people, if you're one of those individuals that says, hey, I've actually been looking at getting into some land, I would love to have an opportunity to be a part of maybe some larger acreage and not have to take on the management of it as well. That's obviously what we do, Boone Capital Land Management and our team of experts. But be able to take part in something I can both enjoy as well as exit and turn a profit on, as well as have the short term, depreciation and the tax strategy that really aligns with what we're doing with our family office or with my wealth. Hey, give us a call. Again, You can reach out at us at boonecapital.co. That's boonecapital.co. We'll jump on a call, have a conversation, man. And we're evaluating opportunities all across the Southeast. And right now, very heavily in the growth corridors around the Texas Triangle. So that's Dallas, Austin, Houston, Dallas, Fort Worth, Austin, Houston, and San Antonio for just a tremendous amount of growth and tailwinds that we're seeing there now with the generational wealth transfer that's happening, as well as just a move for folks who are interested in getting into land in general. The demand is, the buyers are there, the demand is there, and it's Texas. The dirt is there. So, yep. I'm gonna cut it there. 15 minutes. Appreciate you guys for this time on this live. If you enjoyed this video, feel free again to share this to anybody you know. I am not a CPA. I've given enough disclaimers today. Feel free to have a conversation with me. I would love to put you on with my CPA. You can have a talk with him. I hope this was useful and great for you guys. And man, hope you get that piece of dirt. If you're out here trying to get you a piece of land for you and your family to love and enjoy, either with us or out on your own, I hope these videos are useful and helpful to you. God bless.